Good to go? Well, a little bit belated, but welcome, welcome, welcome. And welcome to those online who have watched us kind of suffer through a couple of minutes of IT difficulty, but thank you for joining us. I think we've got a little over 100 people online, so let me cover, not for those people online, but let me cover a little bit of housekeeping before we begin. If you need to use the restroom, the men's and women's are right outside the door in the hallway. You will need a code to get in. It is 521-ENTER. It's written on the backboard if you forget it. 521-ENTER. But welcome. How many of you are partners here in Valley Center? Okay. That's your restroom. That's your restroom. Enjoy. Really, welcome. As you saw from the email, I kind of intentionally left it a little bit vague, not because I wanted to do surprises, but again, what we're gonna do a lot of things tonight. But there's really a lot of good information to pass on to, and those of you who come to these meetings, you know sometimes I get a little excited because of all the good news that we're sharing, and I'm not afraid to say, yes, it's good news that we're sharing on your behalf and on our behalf. It's good for all of us. So anyway, here comes my welcome. Welcome. How was that? Thank you for coming. Oh, really, we know you've got other places you could be. We think maybe that we kind of threw people's schedule a little bit out of whack because it moved from the second Tuesday of the month to the third Tuesday of the month. But we did that because we wanted Darwin to be here. We know you all wanted to see Darwin. So he was disposed last Tuesday, traveling. So anyway, thank you for coming. We appreciate you being here. You know that I like to have a little bit of fun before we start the meetings, right? Okay. So we're going to do a little bit of Did You Know? And I really want to see a show of hands of those who did know. Okay? But did you know that some people have an extra bone in their knee? It's called a fibula. See, these guys are laughing at me. They think I'm making this up. This came off the internet. It's true. In 1918, in fact, let me go back a little bit more because I do a lot of research on these to make sure they're true. In 1850, about 60% of the population had this extra bone. For some reason in 1918, only 11% had the bone. In 2018, it's now back almost to 40%. So there was a thought back in the mid-1800s there was an evolution cycle or something coming. I'm going to kind of get morbid here, but I think maybe the war might have had something to do with that, or maybe the testing was not as good, or whatever the case may be. But how many people knew that? Does anybody think they have a fibula? Well, odds are that 4 out of 10 people in this room have a fibula. Okay, did you know that sliced bread was first manufactured by a machine and sold in the 1920s? It was the greatest thing since. Come on, help me. Well, no, it couldn't have been the best thing since sliced bread because it wasn't there. Unsliced bread. Again, I don't make these up. These are right off the internet. They're good. One more for you. Did you know, and I'm sure everybody knew this, did you know that casinos and shopping malls are intentionally designed to disorient the visitors? You know that, right? It's actually called the green effect, the green transfer. And this causes visitors to lose track of time and location, which means they tend to spend more money and spend more time in there. It's a fact. It's a fact. That's why you don't see any windows in your casino. There's no clocks. And they intentionally design it so it's a little bit confusing and you can get lost. How many people knew that? See, okay, a lot of people knew that. Okay, we're going to get down to business because here's what we're going to talk about tonight. I'm going to do a little bit of 2021 in review. And again, here's the exciting part. I get to share just a lot of good news. And that's because there really hadn't been any bad news in 2021 from a DGRE Dark Court perspective. And I hope you agree with that. Then Darwin's going to come up and talk about some serious stuff. What do we expect coming in 2022? What does he see coming? You know, he talks to experts all the time. We met with lenders today and picked their brain. What does he think's coming? What does it look like? What's the landscape going to look like in 2022? Of course, we'll have plenty of time for Q&A, and it can be basically an open session, whatever you want. I'll say this also at the end of the meeting, but Jeremy's already burst my bubble. This is the last meeting of the year. I'm going to miss your smiling faces at least until January, but we're going to wish you a great holiday. So, having said that, can I start with some good news, Mo? Mo, can I start with some good news? One more time. Mo, can I start with some good news? We had this all worked out. We tried it 15 times. There we go. Okay, we got a lot of clapping going on. 2021 in review, successful investing with DGRE. That's what I'm calling it. So, how many Villa Creek partners do we have in here? Raise your hands high. Raise your hands high, because I know you were raising your hands high when you took that check to the bank, right? Okay. This is nothing that had been shared before, but capital raised of $3.4 million, distributed $11.8 million, 218% total ROI, a little over 42% annual rate of return. Mo, can I get... There we go. See? I'm going to have him trained by the time we get through with this, Ken. All right. How about, do we have any Brookside partners here? There we go. Yeah, we're all on board now. Okay. Capital raise 8.6, distributed 13.8, 56.3 total ROI, 14% annual rate of return. You hear us talk every once in a while about singles, doubles, triples, home runs. I think Villa Creek was a grand slam, so to keep with the baseball analogy. Can we see another grand slam? Here we go. See, Mo's guy, he's on my path now. So. Crossing. Do we have any crossing partners in here? Just one? Okay. Capital raise 1.1 million, distributed a little over 5 million, 355.54%, total ROI 43.5% ARR. Can I get one more awesome clap sound? No. Hey, see, we got it working tonight. See, we practiced this today, you can tell. Isn't that awesome? Okay, well, I'm not done with good news. Thank you, Mo. Okay, do we have any Silver Creek partners in the room? Silver Creek partners online. Okay, as you know, this is currently in the process of selling. Little bit of an update, and the reason that these numbers, you're saying, okay, Brian, where are the numbers here? Obviously, until it closes, we don't know exactly what the numbers are. We have been a little bit of an update. The buyer did exercise their 30-day extension, which means we thought we were going to close the end of November, or we were hoping. Now you're looking at the end of December, and it might even bleed a little bit into the early part of January, because anytime you try to close something at the end of the year, you know what happens. Might not even be bad news for some of you, especially if you were in Villa Creek, Brookside, or Crossings. Guess what that means if it does happen to bleed into January? Jeremy? There you go. Say that again, Jeff. Get my capital gains lower. So it wasn't planned. I would just, and again, do not hold me to these numbers. I am saying, Brian, I know you're online. I am not saying these are final numbers. If it were to close tomorrow, you're looking at about an 18.5% annual rate of return. Okay? There's a defeasance yield maintenance on the property, so it really depends on what happens with the interest rates between now and then, but you kind of get an idea. Okay? Again, can I get a clap, Mo? There we go. Okay. And you might think, well, that's the last property that's selling this year, right? So that's the end of Brian's good news. No, it is not. No, it is not. Does anybody want to hazard a guess? If you're part of DGR, you can't speak up. But I'm going to put the 2021 distributions. Manos, just throw out a rough guess.
I don't know, 10 million?
Okay, see, I love it when people underestimate, because if he'd have said 100, I'd have been kind of shot down. So I'm not going to ask anybody else, but thank you, Manos, for that guess. Guess what? 2021 distributions. Now, this will include all of the properties that sold, as well as your monthly distributions, which have been taking place since January anyway. Back to the DGRE investors. Thank you, Mo. Perfect timing. $38,919,000. Can I get one more, Mo? I mean, isn't that, come on. Come on. This is literally almost, I'm just going to say close, $39 million. I can hedge up a little bit, okay? Isn't that awesome news? How many of you are benefits of that? You did? Okay, yeah. How many of you want to be in the future? That's even a better question. Come on, that should be everybody, right? Okay. There's even more. We talked about what's already been given back. Let's talk about acquisitions, though, because I'm going to be standing here maybe 3, 4, 5 years from now, and the slides that are talking about what was given back are now going to be these following, because these are acquisitions. And I'm going to, because, does anybody remember COVID? You know, we didn't have a meeting in 2020 because of COVID. So we really never got to brag about the fact that, you know, our partners had a lot of acquisitions in 2020. So congratulations to the DGRE family of partners for the following acquisitions. 2020, Gold Creek, Valley Center, Corners, Village Oaks, Oakview. Anybody in those? Come on. Lots of people. Lots of people. Roughly, what, a little about 89 million? I'm just spitballing there. How about 2021 acquisitions? Blue Tahoe, the Brazos, Frankfurt, the Crossing, and the Citadel. I think that's a little about 70 million. So what does that add up to in acquisitions over the last 2 years? 163,526,000 in acquisitions. Right on time, Mo. Thank you very much. Right on time. Great news, because what does that mean? Those slides that we saw tonight will be part of my proof when I'm standing here 3, 4, 5 years from now, right? Okay. Is there any more good news that I can share? Okay. I kind of let it out of the bag already, but that's the reason it hadn't populated. What possible good news could I give you about Frankfurt Station tonight? Susan said it. Guess what? Distributions to start in November, Frankfurt Station. That's this month. And I'm going to clarify this just a little bit because I know it's a little bit misleading. You know, the distribution that you get is for the, okay. If you're, well, let me chime in here with Julian. If you're on ACH, and remember Julian can cut you off at any time. We don't do that, but he told you that last month. Then you're going to have your money in November, last couple of days of November. If you're still relying on United States Postal Service, not a problem, but understand I can't really say when you're going to get that. We have some, believe it or not, that are 3, 4, 5, 6, sometimes 6 months that gets lost. Now, we don't ever wait that long to cut them another check, but it's just, if I can encourage you to do one thing tonight is not only invest with DGRE, but get on ACH, please. Get on ACH. So, great news. Thank you, Susan, for the help. And I'm going to back up because, is that enough good news? I mean, at least for now? Good news? Mo, can I have a, there we go. See, we're a fine-tuned machine here. So anyway, I'm going to bring Darwin up. We're going to talk about what Darwin expects in 2022, and I will leave it with you.
I don't even know how to work this thing.
Just push the button that says
Big
forward.
button in the middle, okay.
Yeah, big button in the middle.
See, that's how technically savvy I am. Now, there was more good news. Is there more at the end?
Yeah,
I won't say it. I won't steal your thunder. You get to do the good news, okay? So I want to look out for what's going on in 2022, okay? What do we expect? What are we seeing? First off, competition is going to stay fierce. Okay, it is horrible. There's 30, 40 offers on every single property. To get this last deal done, for example, not only did I have to have a very aggressive price, I put up $500,000 non-refundable day one, and it got passed through to the seller right then, rather than being held in escrow. So you got to do things like that to get properties under contract, and that was only a $10 million deal. Okay, we lost out on a $36 million deal that I thought I was the only guy that got to look at it, and I got swooped in there by 200 grand and $1 million non-refundable day one. So because there's so much demand, it's going to drive the returns down. Okay. So we're looking at 14 to 15 projected average annual return is what we're looking at now. I used to shoot for 16, 17, 18. That's getting squeezed and squeezed and squeezed. Interest rates will have to go up to counter inflation. Okay. Everybody, you guys have all seen what inflation's doing, right? And the way that they counter that is they raise interest rates and take money out of supply. We'll go over that in a second. Cap rates will go up to maintain yields. What happens when cap rates go up? Prices go down. Okay. However, but because of inflation, what also happens? Rents go up, prices go up, etc. Inflation will drive up the rents and values. And again, you guys already know this. I'm just recapping it. Inflation is devaluing the dollar, and it happens when too many dollars are in circulation. So we've had a ton come out, and if they pass this other couple $1 trillion that they're going to spend, it's going to be even worse. You're already seeing it in the prices. Has anybody bought any beef lately, or turkey, or gas? shoot, we were in California last week for my anniversary, and gas is over $5 a gallon there. But how many are old enough to remember the 70s? Okay, what happened in the 70s? Very, very high inflation. Between 1970 and 1980, the highest inflation was like in 79, I think it was 11.7%. But every year they had 5, 6, 7, 8, 9, 10% inflation. But the big thing about that is if you owned any real estate, it nearly doubled in value in those 10 years. Okay, so inflation is a horrible thing, except for real estate investors. Okay. Now, construction costs are going to go up, which is going to cause more, actually there's a lot of things. I'm going to go ahead and tell you about that in a second. Making the comps and replacements higher. And how does the Fed fight it? They raise interest rates. Going back to those people, anybody finance anything in the 70s? You remember the interest rate?
Like
16? 18? Anybody else? Yeah, it got as high as 21%. Legal interest rates. You want to go buy a house, you're at 18 to 21% interest rate. What's that going to do to buyers? You turn them into renters, exactly. And they raise the interest rate so that they can then get more interest, try to cool the economy down and take that money out of circulation because there's too much money in circulation. But there are benefits. Inflation hits, the property value goes up, but our loan stays the same, right? So we grow our equity even faster. Rents go up, increasing values. Short-term leases, this is a huge benefit for apartments. This office building, how long is the average lease here?
3 years.
3 years. So we sign a lease today, and no matter what inflation kicks in or rents, we can't change that rent for 3 years. So the benefit is having shorter term leases. We haven't talked about this yet, but it's in my mind to possibly go to 6-month leases rather than 12-month leases. And the reason for that is then we can raise rents faster. Okay, rather than at the end of the year, people getting hit with the 7, 8, 9, 10% raise, do it in 6 months and do it 4 or 5%. Okay? So the short-term leases in apartments are a great benefit. Higher price leads to more renters and more renter demand. Higher prices, more down payment. People already don't have enough for a down payment. What was the, Garrett, do you remember that, how many years it takes them to save, somebody who's buying their first house? Let's say it was like 7 years it takes them to save to buy a house now for the down payment. It's going to get worse if prices go up. So those are more renters for us. Higher interest rates also, then higher payments for them. So all of these things will help us in real estate. Now, I put a lot of thought into it the last month or so. Does this change our investment strategy? Would this change anybody's investment strategy? Anybody? Okay, Nikolai, how would it change your investment strategy?
Going more into A class.
Going more into A class, okay.
That's pretty much it.
Okay. Kind of the thought process on this is, if we were to change it, let's look at some revisionary things real quick. How many would have put every single penny you could scrape together and buy properties in 2015? Okay. Anything you bought in 13, 14, 15, 16 was a home run. Okay? You should, if we could go back in history, we'd go through and invest everything we could, and we wouldn't care about cash flow, we wouldn't care about debts, we wouldn't care about anything because the prices were going to shoot up through the roof. And I get beat out by deals just a little bit all the time with somebody that was more aggressive. So do we want to change our underwriting to not have cash flow or be negative cash flow? Do we want to change that? No. No, we still have to remain constant on that part of it. Do we want to be do we want value add properties still? Yes, of course. Okay, yeah, not a trick question. Not a trick question. But bottom line, we still have to buy and make sure that the property is going to support itself. Another looking back, if I want to give myself a a lower grade than what we've got all the good news on, is the biggest mistake that I would say I made was locking in long-term debt on all the properties. Okay? That's on me. However, if interest rates would have went up, I would have been a freaking hero. Okay? So we're still going to maintain being conservative on those things, on our debt, on locking in interest rates wherever we can, because interest rates are going to go up at some point in time. Who would have known that we would have had 10 years of lowering cap rates and lowering interest rates? And I was talking with the banker today, when we got our first interest rate under 5, it was 4.85%. And I was thrilled. I was like, unbelievable, lock this in for 12 years, because as interest rates go up, that'll be a hedge against rising interest rates. We'll have an additional value because of that loan. Well, interest rates went down. Okay, which caused us to have a little bit more of defeasance, prepayment penalties, things like that. So that hurt our returns. Did it hurt it that bad? No. Those returns could have been a lot higher if I would have done variable rate mortgages. However, the risk then gets put back on our partners that if interest rates went up. So I didn't want to put that risk on you guys, so I want to make sure that we're doing what we can to stay conservative. So we're not changing our investment strategy. We're still not buying in the hood, okay? We're still not going to buy in a sea of C's. I like hearing that term. We're still not going to buy things that don't make sense, okay? So our investment strategy is not going to change, which kind of is an interesting thing. Forecast for 2022. Guess what? Nothing changes. Okay, but we're still going to buy because it's still a good time to buy. Who's been investing in real estate for over 30 years? Okay, question for you that have been doing it over 30 years. Was there ever a bad time to buy? No. No. 2008 wasn't a bad time to buy?
No. Great time. What about 2006?
2006, was that a bad time to buy? Here's the whole thing. Real estate is, I've explained this before, it's like a yo-yo going up an escalator. It's going to go like that, but over time, it's still going to go up. If you're betting on the short term, you might get stuck. People that trade stocks, same type of thing. You're trying to time the market on those swings, on those dips, right? Don't do that here. Plan out at least 3 years, 3 to 7 years, which is why we budget for 5, to ride through any of those things to make sure it makes sense. Okay. So we're not changing our strategy. We're still looking at every deal that comes on the market. It's harder to buy, so we might have fewer deals. Might have to get a little creative on how we're getting those deals under contract, but that's on us. And our job is to provide you with good investments to go ahead and move into. I think I'm going to go ahead and discuss what I showed you earlier. I had somebody bring to my attention an investment in a property. Okay, first off, how many of you get offerings from other sponsors? Okay, I don't know why everybody's not raising their hands. I'm sure you see them on Facebook and everywhere else. Perfectly fine, you invest in anything you want. It shows the returns, your IRR, your multiple, all those things. And any time I click through to look at those, I can never find their underwriting. Where'd that come from? Okay. And so I got the underwriting from another sponsor. And they had their calculation for internal rate of return all wrong. Okay? Artificially high. Something that would have been a 12% IRR, they were advertising as a 22. Because they didn't know how to calculate IRR. Yet they're raising money for these deals. Okay? So that's scary. So I want you to make sure, understand the numbers, which is why we do the education on all that and try and do more of that. And so we'll do a video on that part of it as well, so I don't put it up right now. But you got to know the numbers. JT would say that, right? Know your numbers and look at that and dig deep into them. If you want to have us look as a secondary look, we'll look at anything you want to see and give you an opinion on that. Okay. And we're not going to say yes, do it, or don't do it. We're just going to say here's some questions to go ahead and ask. Okay. Next thing, I need volunteers. Beck. We are starting a passive real estate investor association. PREA for short, not to be confused with SUPREA, but PREA. And I would like 10 people to participate in this. The benefits, I have no idea what they're going to be right now. Okay? No idea what those benefit, but we're going to build an online community to share resources, evaluate deals, because I want you to put in, but to go ahead and what would be helpful to you guys as passive real estate investors? Any ideas? What would be helpful to you? PPM review. What else? I've got water up here. What's that? Education. What else? Right. But one of the things that I want to put in there, for example, is does anybody track their actual returns on their investments? I would say most of you do, right? Okay. Okay. Some people just count the checks. But if I would like to be able to have something that every month you can go in there and put, okay, I did this deal, go ahead and put in how much the returns, just like I provide on mine, what the returns should be each year, so that you can grade me on what I'm doing and grade me against other sponsors and other sponsors and other sponsors. But you can do this on your own then by how much did I invest, and whenever you get a check, go ahead and put it in there each month, and then you can go ahead and see what the overall return is, what your return is per year, what it is per month, what your average annual return is, what your multiplier, what your IRR, et cetera, et cetera, et cetera. Okay? That way you can have all of your stuff in one place that you track yourself.
But isn't that on the dashboard?
That's on our dashboard, but you can't put that for your other investments.
Okay, right. Gotcha.
So I want you to put whatever you want in there to be able to compare that. I also want you to be able to compare me to other sponsors or other sponsors against each other. And by sharing that resource, okay, how do I ask that? I know a lot of you were in deals with me, but who was in other deals with other sponsors?
Not many.
Okay, see, I mean, wouldn't it be nice to be able to compare everybody and see how they're doing? Or if you're looking at investing with another sponsor, get some feedback from other passive investors on those without having, nasty emails being sent back and forth and things like that. So those are type of things we want in there. Plus deal flow. I want to have put up there who are the educators. Put Sumrock up there. Put Grant Cardone. Put all the other people on there so that, hey, here's some resources you can go to. Here's free resources and here's paid resources. And it's all just to share this community. We have a big problem in the fact that, hold on a second, Nikolai. We have a big problem that you guys doing this, you didn't get an education in high school or college about this, usually. Okay? You have to go out there and learn it on your own. And then, thankfully, you're here and you've learned from us and you've invested with us and you've done that. But other people out there, how do I do it? And they go out and they buy a house and then they lose money and they say, forget it, I never want to be in real estate again. But let's figure out a way to go ahead and share those resources, get more deal flow through there, allow you to comment on the different sponsors and grade them and show what it is. Yes, sir?
Yeah, just what would be the platform for that?
All online.
Facebook closed group or something?
Well, we could do it that way. Here's the whole thing. Right now, it's just a vision. Okay? I haven't started any of this. All I did was register the website and set up an email and have a vision for that. But that's where I need your feedback. As passive investors, I look at it one way. You guys look at it a whole different way. So if you're interested, send me an email, preia@darwingerman.com. If you're interested in being involved in that, of course, we'll have some type of perks in there for you for doing that. Okay? Just out of curiosity, does that sound interesting at all?
Yes.
Okay. Okay, good. Okay. We've got a new deal rolling out next week. Can't give you too many details, but I'll tell you this. It's in Rockwall. It's very near downtown. Highest median income of most of the properties we bought. Okay? Citadel has a high median income right around it also, but $105,000 median income. Okay, is anybody familiar with Rockwall? Look at that, about a third of people. High income area, right? Nice place to live, nice place to call home. There's not a lot of apartments in the area. This is definitely a value add. This is a $20,000 a door CapEx deal, maybe 25 if Brian has his way. Homes in the immediate area. This is like adjacent to the property, 350 to 425,000. No other apartments in the area, so very limited competition. And a big thing, individually deeded as condos. Does anybody know the biggest benefit to that?
So one by one.
Okay, but Jeremy knows. Anybody else? What?
Right here, yeah, you said it right. So sell one by one, right?
They're individually deeded. There is a benefit to sell them off one by one, but for us as apartment operators, what's the biggest benefit?
Property tax,
Property taxes. Why?
because they're not, they're valued by homes.
Because they're valued by comp sales. Okay. When you go in, has anybody fought their own taxes, just out of curiosity? Okay. It's easy to do, by the way. It's painless. You can go in and fight your taxes yourself. You just have to wait in line and argue your case, and they're usually pretty sympathetic to individuals coming in and fighting their own house value, for example. When you get in the larger properties, you need to have a consultant that can really dig deep into all that. The big thing is on apartments. We buy apartments that, what was our last big? Oakview. Do you remember what it was taxed at? What the property tax value was, not our property taxes, the assessed value.
28 million when we bought it.
Okay, 28 million when we bought it, but we paid 32, so that one is not a good example. Bottom line is, we'll pay $20 million for a property. The previous tax value was 10. And so the Central Appraisal District says, oh, it's worth $20 million. We're going to double your taxes. So it goes up 100%. Okay, that's on the commercial side. Okay. Now there's a whole separate side that's residential, one single-family home all the way up to 4 units. But that also includes like condos. The residential side, less sophisticated. They're only looking at sales comps on what else something similar is selling for. And because of that, we're looking at individual condos. The value, the property tax value is only going up 4 to 5% a year, rather than 30, 40, 50% every year. So we have a huge benefit of that. So Citadel is like that. Brazos is like that. Village Oaks is like that. And this new property and Citadel. So those are all very good things. As a matter of fact, I'm exploring the idea to see, can we turn all of the properties over to condos and try and get that all over on that side of the equation? I don't know if Brian Johnson doesn't seem to think that'll work, but we'll see. But individually deeded, that rolls out next week. Now, the one we just closed, actually the one we just raised money for, Citadel, how many hours did that take to fill up? About 36 hours to fill up. This will be a $5.4 million capital raise. What was Citadel? So this one will fill up in about 36 hours also. Just so you know, so if you're interested, it'll be fast. So keep an eye out for emails, etc. If you're here, you probably got emails. Yes, sir?
So is this going to be in a time where when Silver Creek sells, that money can be?
That is a great question, and no. Just because we're going to be closing that, and because when Silver Creek sells, it's going to be about a month before we actually have all the distributions made, et cetera, and we're going to be closing this one at the beginning of the month. So there's not that time. Hopefully we'll have something else in the hopper to redeploy that Silver Creek money. Okay, and at least that's pushed off to next year so we don't have to worry about the taxes as much. Okay? I already pressed it. There we go. Okay. So that's all we have for now. So now we go to Q&A, my favorite part. If I was Miss America, that'd be my favorite part.
Do
I'd suck at the bikini part. Yes, ma'am.
you have some more detail about the new deal, like pictures and or what plan?
No, we're not giving anything out yet because we're still doing due diligence.
Test.
And so I don't want to share any of that information yet, which is why I was intentionally vague.
If you don't
Just-
mind, just one quick announcement. Because we do have a little over 100 people online, they'd like to hear the question too. So if you have a question, raise your hand, please, and I'll pass you the mic.
I just have a question about what is the next one that is coming out? The one in Rockwall?
Yes.
Oh, okay.
That'll be the next one coming out. We have an offer that's going in on another property on Thursday, tomorrow, day after tomorrow. We have an offer going on one of those. Not sure if we'll get it, but and I'll say it's in Waco. I will say that, and it's a nice looking asset, a newer asset. What else? See, no questions. You guys are easy. Oh wait, hold on a second.
Thank you, Susan.
Just because of the problems that you're talking about with any age at all, it's because of Gold Creek's performance, which has been so stellar. Does that justify going to all A-class or more A-class
Well, I
properties?
would say that Oakview and Gold Creek, I mean, we paid about $132,000 a door. That same seller, the same builder, has a similar product that he built in Weatherford that's under contract for $198 a door. Okay? So if you're in Oakview or Gold Creek, that's good news for you as far as potential values. But I think that everything is being bid up so high. There's a property near Frankfurt Station, and it is, do you remember the year? 2000, near Frankfurt Station, $350,000 a door. It's like 2015. Okay? There are some insane values on the Class A properties.
Interesting to watch that, to see if it actually sells for that.
Yeah, see, yeah. Yeah, it's an outrageously high number. There are some crazy, crazy numbers. Makes me thrilled to have Frankfurt. For those of you who are in on that one's spectacular. What else? Nikolai and gentleman in the back.
What is your impression of what the inflation and the economic situation will have on the values of the properties in Hawaii?
In Hawaii, same scenario. And just to give you an update on it's still going to have, inflation is going to hit us across the board, anywhere the US dollar is used. So we're talking about Hawaii. Just to give you a heads up on that, we had that listed for a while, by the way, with a local real estate agent there. But it's been listed all during COVID, and people couldn't travel to Hawaii. We actually pulled that listing off, and I'm relisting that with a Dallas broker who's going to co-list it with our girl in Hawaii, so that she can still show it and things like that, but then we'll have a larger base to advertise through. My guess is somebody in San Francisco is going to buy it. That would be my guess. But as far as inflation, it's going to be the same scenario. The value is still going to be going up. Well, what was it, 5.7 or 6.2 inflation that they just said this year, last month? 6.2? 6.2. So, I mean, here's the thing. If values are going, $10 million property, this year's $10,620,000 in rough numbers. I mean, obviously, there's a whole lot of metrics to that, but it's still going to affect the properties in Hawaii as well. So we might be better off. Nikolai.
Yes. Have you thought about build to rent?
Build to rent. Have looked at build to rent. Just so you know what build to rent is they actually build single family homes or townhomes, individually deeded, and they build a whole community. It's just like going and buying a Fox and Jacobs and buy every home in the community, for example. And then you manage that whole thing as an apartment community with individual houses. And it's another good model. There's a lot of models out there. And on the building side, while I would love to be involved in the building side, even the build to rent side, I haven't pulled the trigger on that. I haven't found a deal that made enough sense, and haven't And since it's a whole different beast, that it's going to be harder to raise money, it's going to be harder to analyze, it's going to be harder to get in that door, just like anything. The first one you do is the most difficult. So we want to make sure whatever the first one we do on new builds or build to rent or anything like that is an absolute home run before we move into it, because we can't afford to make a mistake. And so we want to make sure that we're protecting everybody's money and not gambling with somebody else's money. What else?
Darwin, I have a question for you.
Yeah.
I'm
Or
gonna
is there
pref-
any
I'm-
online? You might get Mo.
I'm going to preface it with a statement first. There's a reason that when you come to these meetings, or the emails that you get from us when we talk about you as a group, we call you a family. And the reason for that is because we care about it. I mean, we care about our investors. We want to look out for them. We want to take care of them. So, Darwin, here's a question for you. You alluded to this a little bit early about how look at the numbers when you're looking at other sponsors, and look at the numbers and just make sure that what you're getting, you trust the information you're getting. So I'm going to ask you, have you ever been through a downturn? And if so, how important do you feel like it is to make sure that when you're doing business with other sponsors, that that's an important key factor to consider?
Oh, wow. Okay, first and foremost, we started buying in 1989 here from California. My dad couldn't find it. He had an exchange property that he sold in California. Couldn't find any good deals there. Came to Texas. And in 1986, the crash in Texas happened, 84, 85, 86. There was oil crashed. The savings and loans had been deregulated, so there was free money. People were building buildings to get loans, not getting loans to build buildings. And they'd make money on the loan on the front side. So building was crazy, and the tax code allowed you to write off dollar for dollar whatever the loss is. So if you have a $100,000 tax liability, you invest $100,000 that had a $100,000 loss, you wrote that off. So rather than paying the government, you throw it in an investment instead, and it doesn't hurt anything. Well, that caused overbuilding in the early 80s for DFW, huge in DFW. Huge. There's different books. The Daisy Chain is one of them. We're talking about, this was party time in Dallas. Bankers all had private jets. They would fly everybody around on these excursions just to go golfing. And quite honestly, if you read the book, cocaine and hookers on those planes and things like that, just to help people get loans. And so that crash happened. Now, they talk about a V recovery. You heard that recently? It just dips down and goes back up. They've got a U recovery that's a little bit prolonged. You've got a bowl recovery, which is a little bit longer. Here, they were talking a platter. They said this is a platter recovery, because it went down and just stayed down. Everybody in Texas, nobody wanted to buy in Texas anymore. Values dropped dramatically. We were buying 5-year-old properties for $20,000 a door, okay, because we had cash and nobody else wanted to buy. And so I came in at the tail end of that crash. We still had a whole lot of management problems to get new leases and renew new leases and keep the residents happy. So we go back to that part of it as far as how to maintain those relationships with the residents so that you can stay occupied, how you can stay ahead of people moving out when rents are going down. And then we also had the same thing happen in 2001 and 2008. And you have to manage through all that, which is the whole reason why in-house management is so important. Because we can control all that. You have third-party management, and they're just usually, this is a generalization, they're just in it for the fees. So they don't really care if the property performs. They're also trying to make a profit on their deal. They'll get new contracts, lose contracts. They don't really care about you as a client. Whereas with us, we do care and want to make sure that the properties perform to our expectations. So in those down markets, management is the key. And we can be able to ride through a down market if it happens. Now, talk about stagflation and things like that, where there's possibility of property values going down. I don't see that in the near future. 3 or 4 years, probably, maybe another crash. But all it is we prepare ourselves to be able to ride through those crashes. If it goes down, the property value goes down, but does cash flow go down? Cash flow generally doesn't go down. Maybe a little bit if you're managing it right. But the value goes way down, so we're just not going to sell during those times. Okay? That answer the question? Okay.
It's just a caution because I read a lot online talk about getting in bed with some sponsors. Again, nobody in particular, but just
Everybody
and
who's
a lot of
invested in
peop-
anything in the last 10 years
That's
are
right.
heroes.
That's right.
So, everybody's made money the last 10 years. But in some deals, had struggles, but in general, the whole market went up. Any questions online?
Well, there was one question, I'll take it, and it was, are there any other properties that we're considering selling? And the quick answer is no. However, we are always looking at our entire portfolio to find the optimal time to sell any specific asset. So when we deem it the proper time for one of those, we'll let you know, usually after we have it in contract. Not before, but currently we have no plans to put any other properties on the market.
And again, we talk to brokers every day, and they're always looking for listings. And we usually go back to the same broker that sold it to us so that we don't step on their toes so we get other deals. And because of that, we are usually in the top 3 or 4 with a lot of the brokers. When a deal comes on the market, they'll come show it to us. And that's what happened on the one that I just missed out on. I thought I was the only guy. Well, they showed it to 2 other people. And that was it. They just said, show it to 3 people and we'll go from there. So we still do that. We have got great relationships with the brokers. So they're always saying, hey, will you sell this for this? Will you sell this? Anybody that owns real estate, I'm sure, gets texts and emails and phone calls. Calling about your property at XYZ. You're interested in selling it. We get that from brokers and everybody. So. What else? Okay.
Looks like all
That's
the
it.
questions, but I would like to have another turn, please.
Take it.
I get to share lots of good news. I saved some of it to the end because after you do Q&A, it kind of gets dry, whatever the case may be. So, can you believe that I have more good news to share other than the slides that I already shared? Come on. Okay, yeah, see? I'm not going to say that that's my good news, but hey, that's good news too. Julian and Garrett can help you with anything you need. Okay, you see, what property do you see on the screen? Oakview. What possible, okay, let me give you a little bit of background. This property already, since we've had it, which by the way, hadn't even been a year yet, you realize that? Hadn't even been a year for Oakview. It for about 10 or 11, well, for about 9 months, was distributing anywhere from $40,000 to $50,000 a month. A couple of months ago, how many Oakview people do we have in here? Okay, a couple of months ago, you saw that it went up to $60,000 a month. No, Mo, can I have a? Yeah, there we go. Okay, we're going to get that right one of these days. We're going to get it quarter. But I have more good news. What possible additional good news could I have about Oakview? We are not selling it. You kidding me? We're sending out a $60,000 distribution every month. Okay, really good question, Nikolai, but that's not it. I will handle that real quickly, though. We're not adding on to it. Okay, Nikolai said, has the insurance been settled? Insurance claims from Winter Storm Uri. Remember, it has a name. At Oakview, the answer is absolutely yes. I mean, it was actually done about 3 or 4 months ago, so we're good to go there. But that was a fairly small. The rest of them are actually falling in line. You remember I talked about our friends? Remember a couple of months ago I talked, these are our insurance partners who said, do what you need to do, take care of your residents, whatever, I don't care. We know you got to take care of them, take care of them. We're too busy. It's going to be a while before we can even send an adjuster. We had some properties that didn't see an adjuster for 4 months. But I can't wait for 4 months. Do what you need to do. We're not going to fight you at all. Those are our friends. Not so much, not so friendly 6, 7 months down the road. Anyway, it is all progressing nicely. Oakview, to your specific question, yes, done deal, everything's good. Gold Creek, we're this close, but they're kind of keeping me on the hook because they just keep sending a little more money, a little more money, a little more. We've already recovered about 80% of what we expect to get at Gold Creek, but we still have a little bit more we're fighting for. The rest of the properties were pretty small, so good question, Nikolai. But anybody guess what more good news could I share about Oakview? Something about a government check. I didn't hear that. Big fat government check. I don't know what we'd get that for. Somebody said refi. No, so let me just go ahead and tell you what the good news is. Okay?
Why don't you build it up a little bit?
I am going, believe it or not, that $40,000, $50,000, $60,000 we've been sending every month, I've been a little conservative. Can you believe it? Can you believe it? I am going to, in December, send out a $300,000 bonus distribution to the partners at Oakview. So now I get the applause and the clap. What about Gold Creek? Not a bonus, but it's still distributing at a heavy $40,000 a month, and it's well here and let me tell you, I probably should preface this a little bit. Just because it's close by, just because it's a relative sister property. Anyway, distributions are based on, and people ask me questions, is there a formula? Yeah, there's a formula. It's really simple. How much net income did we have from the previous month, and then how much of that do I want to distribute? And I say I mean, it's in conjunction. We talk about it. But, you know, if a property has got $10,000 net cash, net income per month, I'm probably not going to distribute $40,000 because we're going to go in the hole pretty quick, right? So the bottom line is that Oakview has been overperforming. Gold Creek is still performing, but Oakview is just I said it to my staff the other day, but I'm not going to say it here. But I mean, it's just, what can I say? Again, it's been doing $40,000, $50,000 a month. It's recently been $60,000 a month. And I was a little bit conservative in that. I'm never going to take everything that we made the previous month and send it out. We've got to keep a little bit of reserve, and you want to continue to build that up, just like your savings, right? You don't spend everything you make. You save a little bit. So we've been saving it for about a year, and guess what? It's time to say, you know what? It's still doing wonderful, exceptional, way above all of our expectations, which is thrill news. So this is your money. I've been holding it. My apologies. I'm going to give it back. So Mo, one more time. One more time. Okay, anybody in Oakview? I mean, I only saw 3 or 4 hands, so I'm sorry that all of you are not in Oakview. So.
And by the way, if you want your distribution in December, I know one good way to do that.
And that would be when I say, this is what, when I told you this when we started the meeting, I'm actually distributing this in December. If you're on ACH, you'll get it in December. If you're on U.S. Postal Service, I don't know. But I'll ask you, allow 3 to 4 weeks for delivery, United States Postal Service, and then let me know and we'll talk about it. Could I possibly have any more good news?
I don't know. I don't know if my heart can stand it.
I want to give this away tonight. No, Julian, you're not eligible. This is, how many of you ever went to, in elementary school, and your teacher said, I want to make sure you're paying attention. So at the end of the class, they kind of have a pop quiz. You know, so again, I've only got one of these, and it's going to go to one individual tonight who was really paying attention. Okay? So I'm going to put a question up on the board. And the first hand, Garrett, I'm going to ask you to get in the back of the room. Jeremy, you can help. Julian, help. The first hand that goes up, obviously with the correct answer, I'm going to bring you a nice, crisp $100 bill. Okay? You ready for the question? What is the name of the extra bone found in 39% of the human population? I actually saw this lady back here. She was, as soon as I turned, who? Okay, you guys were in the back. Who was the first one? What is it? Okay, say it one more time. Yes, thank you. Fabella, Wendell, this is yours. This is your $100 bill. I'm actually, Wendell, I'm a little bit surprised, to be honest with you. Not because it's you. No, I don't mean because it's you. I actually made a bet with myself that it was going to take 4 or 5 different chances. You wrote it down? Okay. You were a note taker in elementary school too, weren't you? You were a note taker. Well, congratulations. And I would ask you, the only thing I would say, Wendell, is next time you go to the doctor, I want you to find out if you have one. and then send me an email and let me know. Okay?
But wait a minute, if you don't have it, you gotta give it back.
Fabella.
No matter what. Right. I'll make it
Okay. To kind of wrap this thing up, on behalf of the entire DGRE team, on behalf of the DARCorp team, this is serious because, you know, I like to get a little levity as we're talking, but this is serious. We talked a lot about successes tonight. We talked about $39 million that we distributed back in 2021 alone. Yeah, you have no idea how that makes us feel. It is awesome to be able to give that back. But you know what? It didn't happen because we're the greatest. We are, but again, you had to put your money up. You were the catalyst for all of that success. We could not do what we do without you, our family of partners. We don't call you investors, we call you our family of partners. So as Jeremy already burst my bubble before the meeting started, this is the last time we'll get to see your smiling faces this year, those of you online as well. So again, thank you for coming. Thank you for everything you do on behalf of DGRE and DARCorp. We really appreciate it. This is absolutely true. Thank you for your trust and faith in the DGRE team. You're giving us your money to invest, and you're saying, I trust you to take care of it, trust you to make wise decisions. This is not a slogan. This is what we talk about every single day. Every single decision that we make is, okay, what's in the best interest of the partner? There are some things we say, you know what, from a management perspective, I don't want that. What's in the best interest of the partner? Okay, we do it anyway. Okay? So again, thank you, and on behalf, if this is not politically correct, I'm sorry, but happy Thanksgiving, Merry Christmas. This is not a general happy holiday slide. This is happy Thanksgiving, Merry Christmas, and have a terrific New Year 2022, and come back and see us in January. Thank you, everybody.